Hi friends, myself CA Yashvir Singh. As we have discussed in the introduction video that we are starting with the series. So today now we are doing part 1 of the series. In this we are going to compare sole proprietorship versus partnership firm versus limited liability partnership firm versus private limited. We are going to comparatively evaluate these structures along multiple criterias, and then we will see which structure is coming advantageous to us, and we will try to understand. Let's go ahead criteria by criteria. So first let's discuss about the definition. A sole proprietorship is a business owned and operated by single individual. So we have to see that here the single individual is involved. Legally the business and the owner are the same. There is no separate legal entity, means the business and owner are not separate in this case. So there are going to be two cases. First will be that business and owner are not a separate legal entity, and one will be business is separate and owner is separate. Okay, so first case of our sole proprietorship is falling in this category. Next, partnership firm. A partnership is a business owned by two or more persons who agrees to share profit and liabilities, governed by Indian Partnership Act 1932. So in this you can see that partnership is a business owned by two or more persons who agrees to share the profits and liabilities. So that will form partnership firm. Now limited liability partnership firm, when we talk, an LLP is a hybrid structure combining the benefit of partnership firm, that is flexibility, and a company limited liability, and introduced under LLP Act. So LLP is better than the partnership firm. It's better than the partnership firm, but it's a lower structure than a private limited. So it is in between somewhere in partnership firm and private limited. The LLP is having flexibilities of partnership firm, and LLP is having the limited liability concept of private limited. So this is the structure which is combined of both and formed. Okay, so let's understand next point. Now regulating laws. So sole proprietorship, there is no specific law governed by the tax laws itself. Okay, so sole proprietorship, government has not formed till date any law which will regulate the sole proprietorship. It is regulated by income tax, GST. So these laws are going to regulate it. Otherwise there is no specific law for this. Normal partnership firms are regulated by Indian Partnership Act 1932. The limited liability partnership firm are governed by LLP Act 2008, and private limited company are governed by the Companies Act 2013. So this is the regulating law for this private limited company. And if you see, note that 1932, the normal partnership firm act is very old. 1932, it was brought very long back, so it's have a little old provisions. So because of which now government has introduced the new law, that is 2008, which is upgraded version of normal partnership firm. Okay, so next point, capital required. If a person is willing to start a sole proprietorship business or a partnership or this, so there is no minimum amount required, here, no minimum amount. But in a private limited company, standard amount people will bring as a capital is 1 lakh rupees. It is standard but not mandatory one. Okay, so capital requirement means whenever a person is doing a business, they have to bring some capital, right? But there is no, by law there is no limitation that you have to bring this much amount, that much amount. It is the wish of the owner of the business that how much amount he wants to bring to start a business. Okay, so government has kept it flexible so that there is no limitation that if a person is starting very small venture, that he has to have that much of fund availability, not required. With the minimum amount also you can start any kind of a structure in India, sole proprietorship or partnership or LLP or private limited. Okay, time to launch. Third point, so time to launch including GST restriction. Time to launch, by when I say time to launch means by what date you can start the business in that particular entity what you are forming now. So it says including your GST registration. So after company is incorporated or LLP is incorporated or partnership firm is incorporated, you have to go for a GST registration, and from GST registration onwards you can start your business, sale, purchase, expenses, all these things you can start. So for registration of sole proprietorship firm, it takes 4 to 7 working days. Working days means you have to remove the Sundays, Saturdays and any government holidays. For partnership firm, it takes 7 to 15 working days, whereas for LLP it takes 15 to 20 working days, and private limited it takes 15 to 20 working days. Okay, so I have given a range between which by this much time is required generally to incorporate a LLP, private limited or partnership firm, as well as sole proprietorship also. Pre-approval of a name. So whatever name you want to keep for your business, so is there any pre-approval required or not required? That means, are you required to check with somebody that this name is available or not? That we will see now. So for pre-approval of name, not required for sole proprietorship. You can keep any name and start a business. It is not required for a partnership firm also, but required for a limited liability firm and as well as required for a private limited company. Okay. Now, name of entity. For, as I discussed, sole proprietorship, you can start with any name. That means XYZ. If anybody already running a business in the name of XYZ, you can start a business of your proprietorship and XYZ Limited. There is no limitation in that. Okay. So sole proprietorship, as there is no law, you can start any name with any name and continue your business. Now in a partnership firm, again you can start your business XYZ partnership firm. Again there is no problem, name as per your choice. But when you come down to LLP or a private limited company, you have to apply to MCA for name reservation along with the fee, and name must end with LLP. So whatever name you are keeping, let's say XYZ, it has to end with LLP, and here also it has to end by XYZ private limited. So this is something which we need to know, that whatever name you are going to keep in private limited or LLP, the name ends with XYZ LLP or otherwise private limited. So suffix will always come like this. Now what is there in a limited liability partnership firm and private limited are governed by MCA. So what we have to do is, whatever name we are thinking that we are going to keep this name, you have to apply to Ministry of Corporate Affairs. They will check whether that name is available or not. If it is already taken by somebody, then it will tell that you have to apply for a different name, as this name is already matching with the existing LLP or private limited. If that name is not matching in the MCA database, then they are going to give you the name. So they will reserve the name, and later on you have to submit other documents, your KYC documents and other documents, and then they will give you that name, as well as they will incorporate a company or LLP in that name. Okay. So PAN of entity. Now whether the entity is going to have a different PAN or not. So as a sole proprietor, the business and sole proprietor are the same. So the sole proprietor PAN will be the PAN of the proprietorship business also. In the partnership firm, a new PAN is allotted. Now in LLP, again a new PAN is allotted, and in private limited also new PAN is allotted. Okay. Formalities of incorporation and registration. So as sole proprietorship is not regulated by any law, so any government tax registration license is sufficient. So generally in market, people will go for a, let's say, GST registration if required, or otherwise MSME registration, or otherwise shop and establishment registrations people will take. These are the registrations which sole proprietors will take and start their business, as there is no regulating law, so no need of incorporating any business or like that. Simply you take the GST of these licenses in a proprietorship, and you can have a trade name, different trade name, but legal name will be the proprietor's name itself. Okay. For now, let's say the partnership firm. For partnership firm, registration is optional with registrar of firms. Now what is there? The partnership is a contract between two people. So two people coming together, they can form a partnership and make a partnership deed and go for allotment of PAN. But now that whether the partnership, they have option whether they want to register it with the registrar of firms, or they may not register also. So both options are there. If they want to register with the registrar of firms, then they have to file their partnership deed along with some other forms and making the payment of fee, government fee, with registrar of firms, and registrar of firms will register that partnership firm. We will see the benefit of registration of partnership firm, normal partnership firm with registrar of firms later on. For LLP, we have to file multiple electronic forms with the government along with your KYC or the documents with the name reserved already. Then MCA will verify the documents and then give you the incorporation certificate. Similarly, for a private limited company, you have to apply to MCA with the e-forms, making application that we want to start a registration company. These are going to the members. Multiple documents will be required that will be only submitted online, and then MCA will verify those documents, and once they find it is satisfactory, they will give you incorporation certificate of your private limited. So as you can see, LLP and private limited are governed by MCA, whereas partnership firm, there is no governing body as such. If you register with your registrar of firms, then only it is registered. Other than sole proprietorship, there is no such other registration, specific registration. Simply you have to go for a tax law registration or some other miscellaneous registrations. Now creation. So when I say about creation, when an entity will be considered as created in the eyes of law, so in sole proprietorship it is not applicable, as the PAN of the owner is a PAN of a business. So as soon as you go for a GST and MSME, it is incorporated, so no separate incorporation creation date. But in case of partnership firm, created by contract with 2 person or more, so 2 people coming together, they will have a contract that is called partnership deed, and then they will start a business. So creation will happen through a contract in this case. Okay, it is created by law because the MC will verify the documents, and once it is satisfactory, then only it is going to give an incorporation certificate. So it is created by LLP Act 2008, and again the private limited is also incorporated by the Companies Act 2013. Okay, so once the documents are verified, the private limited also the incorporation certificate you will receive. Distinct entity. So as we have already discussed that sole proprietorship do not have a separate legal entity, business and owner are the same. Okay, not a separate legal entity. Again, partnership firm also, the business and partners are same, because in the eyes of law, partnership firm is not separate from the partners. Okay, and in the LLP is a separate legal entity under Limited Liability Partnership Act, and again the private limited is also a separate legal entity. So what, by saying that separate legal entity, means that private limited and LLP can have, even the partnership firm can own the assets, they can own assets, they can have incur liabilities, and they can sue the third parties, and they can be sued. Okay, but it will not affect the members directly or directors of the company or designated partners of the LLP. Okay, whereas once the partnership firm is sued, indirectly the partners are sued. Okay, and sole proprietorship, the business and partner owner is the same, so owner can sue the other parties, and the other parties has to sue the owner itself. Okay, there is no separate legal entity. Okay, so next let's consider the next point, perpetual succession. So perpetual succession, now meaning of perpetual succession is that whether the members, partners, owner may come or go, but the business will continue in the eyes of law. That means perpetual succession. That is perpetual succession. So if anybody coming, joining the firm, or like leaving from the resigning, or due to that, it will not affect the continuation of business in the eyes of law. Okay, so perpetual succession. So sole proprietor, it does not have a perpetual succession, as depends upon the proprietor. So sole proprietorship is not having a perpetual succession. That means if sole proprietor dies, the sole proprietorship gets closed there only. It cannot, it in the eyes of law also, it doesn't continue. Again, partnership firm also, it does not have a perpetual succession. This depends upon will of partners. So if any partner is leaving the firm, or mutually they decide to close the firm, or they are planning to close, in the eyes of laws also, the business is closed, entity is closed. So again, here also it does not have a perpetual succession. If a partner is leaving the firm or has expired, the partnership firm gets dissolved there itself. Limited liability partnership firm, it has a perpetual succession, and member may come and go, but in the eyes of law, the LLP will continue to do its business. Okay, similarly a private limited also having a perpetual succession, member may come and go, but in the eyes of law, private limited continue to be there, and it does not affect the business of the business. Okay, so now the perpetual succession benefit is that if you go for an LLP or private limited, because of joining of any member or partner, it does not affect the business. The business keeps on going. Okay, so this is the advantage in LLP and private limited, that it ensures the continuity of business. It does not get affected if any partner or member has died, or like people are leaving or people are joining. So the business keeps going on. Okay, so now let's understand the next point, criteria. Charter document. Charter document is document which will define that what entity is planning to do, what businesses entity will undertake, and then what will be the roles and responsibilities of owners or managerial persons and all that, and how the internally it will be regulated. So that everything is written in the charter document. So for sole proprietorship, there is no charter document, as there is no regulating law. For a partnership firm, partnership deed is a charter document, and this will define the scope of operation, partners' rights, duties, and obligations. For an LLP agreement is the charter document, defines scope of operation, partners' right, duties, obligations, then profit sharing ratio, then capital contribution ratio. Similarly for this also and this also. So partnership deed and LLP agreement is a charter document for partnership firms, whether it is an LLP or normal partnership firm. If anything has to be checked later on, it is going to be a base document from which that will form the back end of the business. If partnership deed is telling that we are going to conduct this business, that means the business is having objective of doing that business. If anything which is not contained in the objective, then it is contradictory, okay, not legal also. Now, for a private limited company, the charter document is memorandum of association, article of association, and resolutions passed by the shareholder directors defining company's scope of operation, directors' roles, responsibilities, etc. So, memorandum will tell objectives, what company is formed for, what business it is going to carry out, main objective and incidental objectives. And AOA is going to regulate the internal management, how a business will operate, how an entity, private limited company will operate, how managerial remunerations will be paid, and multiple things is written in article of association. And now, so this is a main document which will tell about scope of business, then it will take about how the internal management will happen, and then sometimes some things are to be decided by the shareholders and board of directors by passing a resolution. So that again becomes a part of a charter document. Okay. So let's come to next point, common seal. Now, common concept of common seal is that if that common seal, that means a stamp paper is put on a paper, that means the business has authenticated that document, the company has authenticated that document, company is backing that document. Okay, so common seal. So in the sole proprietorship, there is no concept of common seal, that as the owner himself is the running the business, so no company there is no separate legal entity, so there is no concept of authentication of documents separately. If owner signs, that means the documents is authenticated. Again, in the partnership firm also, there is no concept of common seal, but by partnership deed, if they write in the partnership that the partnership will have a common seal, then the partnership can also have a common seal, but by law it is not mandatory. Again, similarly for LLP may have a common seal by LLP agreement among themselves. If the stamp is put on any document, that means LLP is authenticating that document. And in private limited companies, the common seal, it denotes the authentication of company, and every company shall have its own common seal. So in private limited, common seal is mandatory. Okay. Now understand the point of foreign participation. So let's say I am planning to do a business in which there will be requirement of foreign funding, foreign participation. The foreign person will become a partner because my plan of expansion is there, or my business is such a type that it will require initial very high amount of capital outlay, or otherwise foreign I require in R&D services which can be provided by my foreign partners only, so they will be sharing the profits and all. So based on that kind of businesses, what type of structures we should opt, let's discuss that. So if you have a business, you are planning for a business in which there will be foreign participation in terms of sharing revenues, or like R&D will be provided from outside, or the investors are from the outside and all. So which structure is more suitable, let's discuss. So for a foreign national cannot form a proprietorship firm in India. If any person is there from foreign national, he cannot form a proprietorship firm in India. Okay, even NRI also. Foreign nationals cannot form partnership firm in India. So foreign nationals are not allowed to form a partnership, or if you want to make a partner in a partnership firm, foreign national, that is not allowed. So foreign nationals can be a partner in a LLP. So if you want to have a foreign national as a partner, you have to go for minimum LLP or otherwise private limited. Foreign national can be a member or director in a company. In a private limited also, foreign national can be a member as well as a director. So if your business requirement are like that, you are going to have a foreign people, foreign shareholders, foreign partners, then you should go for either LLP or otherwise private limited. Or also I will tell you that if you, as of now, you don't have any plans, but in future you may have a foreign participation in terms of revenue sharing, or in terms of them bringing some technology, or they are going to provide they will be investors to your firm, then you should start with minimum LLP or a private limited company. Number of members. Now let's understand that who will be the number of partners, number of members in the different type of structures. So sole proprietorship, as it is by name itself says sole, that means only one partner, one person is the person who is going to be member of sole proprietorship. In a partnership firm there can be 2 partners and maximum 50 partners. Okay, in a limited liability there can be a minimum 2 partners, and then there is no limit on, no maximum limit, maximum any number of members can be a partner of a LLP. In a private limited company, minimum 2 shareholders are required, and maximum 200 shareholders can be there in a private limited company. If you want to increase the shareholders by more than 200 rupees, then you have to think of public limited company or a listed company. Okay. Now next, ownership of assets. Now understand that a business, when you are running a business, it will have assets. Now that assets are of a business entity, or it's owned by the members or partners. So the proprietorship, in the proprietorship there is no separate legal entity, so sole proprietor himself owns the all assets of the proprietorship firm. Partners in the partnership firm, partners jointly own all firm's asset. That means if the partnership is dissolved, the assets will be equally divided after paying off liabilities. So partners jointly own all firm's asset. Now LLP is a independently own its asset. That means partners do not have any direct claim in the assets of the LLP first will meet out all the liabilities of as partnership firm, and if any rest over is there, it will be dividing it in the capital contribution ratio or a pre-agreed ratio. Okay, so LLP owns all assets in its own name. So whatever assets are there, it will be always bought in the name of LLP. Okay. Now company independently owns its assets. So there is, members do not have directly right in the any assets of the company, as well as partners do not have any direct ownership in the assets of the LLP. Now let's understand the legal proceedings. So as I told you previously, that if we want to file, like I am running a business and I want to file a case on my customer that he has we have given the services or sold any goods, but they are not making payment to us. So let's understand how it can be, or otherwise the other party wants to file a case to us saying that we have not given a proper services or taken the money or provided bad quality of product and all that. So let's understand in this case who will be responsible, and case will be filed in the whose name. Okay, so legal proceedings. So sole proprietor can himself file a case in other person's like third party, and third party will always file the name case in the sole proprietor name himself. Okay, as it's a sole proprietor. Now when it comes about partnership, only registered partnership can sue. So any third party can always sue the partnership firm, but partnership firm can only sue its customer or any other vendors only when the partnership is registered with the partnership registrar of partnership firm. If it is not registered, simply you are doing business, then you are not allowed to file a case. So this is a very big limitation in the partnership firms, where if you are not registered, then you are not allowed to even file a case against the third parties. Okay, which is now LLP is legal entity, can sue and can be sued. So LLP when any case any LLP will file any case, it can file on third parties, and third parties when file the case, they will file the case in the name of LLP, not the name of partners, okay, or designated partners. So directly designated partners and partners are not coming into the picture, so they are safe. The case will be on LLP, and LLP will fight the case. So individually designated partners and all do not become responsible for it. Similarly for the company also, a company is a legal entity, can sue and can be sued. That means a third party can also file a case in company name. The member and director, they will not be directly involved, or in their name the case will not be filed by the third parties, and even company can file the case on its customers or vendors. So here if you see, very big limitations is there in the Partnership Act if it is not registered one. Principal agent relationship. Now let's understand what is the principal agent relationship. When a person is dealing directly with the customer in its own name, that means he is dealing with the customers as a principal. Or when a person is dealing with the customer or third party on behalf, then it is called agent. Okay, when person is directly dealing customer in his own name, then it is considered principal. If a person is dealing direct with the customer on behalf of any entity, then it is called as agent. So proprietor is a sole contact person in the proprietorship firm. So he's, whenever he deals with anybody, he does any contract, he is doing in a principal nature, okay, because he's not doing on behalf of anybody, because anyhow sole proprietorship, its own sole proprietor, he is the owner of that. Now partnership firm, partners are agent of the firm and other partners. So when partners are partners are dealing with any customer or vendor, then they are dealing on behalf of, they are agent of firm and other partners. That means whatever partner is going to do act, it will be binding on firm as well as other partners. Again, you see, in the normal partnership firm, partners, when because of partners action, the firm as well as other partners are responsible. Again, you see the limitation part, because of one partner act, other partners also become liable. Whereas if you come to LLP, partner act as an agent of LLP and not for other partner. That means if a partner in a LLP, a partner is a designated partner is doing any contract or dealing with them, then he is only doing on behalf of LLP, and because of his act, only LLP is responsible but not other partners. So again, there is a disadvantage in this, where because of one partner, other partners are becoming liable, okay, but here it is not. Only the, because of partner, the firm will become liable for it, not other partners. In the private limited case, the director act as an agent of the company and not of the members. Now here we need to understand that director is going to act as an agent of company. That means director will not work on instruction of members. Director will work as per their own best understanding in the benefit of company. Members cannot instruct directors to work as per their choice, okay. So directors are the people who work as an agent of the company. They will be dealing with, they will do the contracts and all, they will manage the day-to-day businesses of the company, okay. And because of directors action, company is liable for their actions but not members, okay. Next point, liability of partners, members, okay. So now let's understand that when a business is incurring any liability, so who will be responsible for it? Is only business assets can be used, or personal assets can also be used for repaying. So liability of partners and members. So business liability, responsible only business assets which can be used to make repayment of any liability or losses, or otherwise personal assets of the members or partners can be used for repaying the liability. So in sole proprietorship, the limitation, sole proprietorship and partnership limitation is that the liability is unlimited. If let's say sole proprietorship, the liability is 1 lakh rupee and business is having asset of let's say 50,000, then for rest 50, the sole proprietor's personal asset can be used to repay the liabilities, okay. So there is liabilities unlimited, means after using the business assets, the liability can be paid out of personal assets of a proprietor. Similarly, unlimited. In a partnership firm also, partners are severally and jointly liable for actions of other partner, and the firm liability extend to their personal assets also. If in a partnership, if there is any liability after which is not getting met out after paying all the, after using all the assets, then the partner's personal asset can also be used to repay the liability, okay. So again, this is a very big limitation or disadvantages of opening these two structures, where your personal assets can also be used for tomorrow's business losses or any liabilities, okay. So to avoid this, you either go for LLP or private limited. In LLP, limited liability is limited. That means whatever the promise you have done, whatever the contribution you have promised, up to that only you are liable. After that, if any loss is incurred, then it for repaying that, your personal assets cannot be used. So to the extent of their contribution towards LP, except in case of intentional fraud. If any intentional fraud is there, the director becomes designated partner becomes liable for that only in the case of intentional fraud. That means let's say partners has a capital contribution ratio, they have agreed that 3 partners are there, they will bring 1 lakh rupees, and if they have already brought let's say 50,000 rupees, now there is a liability, they will be mixed they will be mandatorily forced to pay the balance 50k only. If they have already put 1 lakh rupee of their business in the business personal contribution, then over and above that they are not liable for repaying the liabilities. So it's an entity which has to take care. If entity is in loss, not able to pay the liability, the partners are not forced to pay out of their personal assets. Similarly, for a private limited company, the liabilities are limited. The members to the amount to pay it up. Let's say a person member is there who has agreed for contribution of 1000 shares of rupees 10 each. He was supposed to pay 10,000 rupees. He has already paid, let's say, 8,000 rupees. Now if any liability is there which company is not able to pay, the maximum recovery from the shareholder can be done for 2,000 rupees. That means unpaid amount on the share, that much amount only can be called for. So his again personal assets are not going to come into picture and will never be utilized to making the payment of liability. His maximum contribution is agreed is 10,000 rupees. That means up to this only, this extent only it can be utilized, or he has to pay the amount. Okay. Similarly for LLP. So again, this is very important point where we have to see that the liabilities are unlimited in sole proprietorship and partnership firm. LLP, unlimited liability, and private limited. Tomorrow you take a loan, let's say for a business you want a loan, let's say you have taken a loan of 1 crore and now business is not able to repay that. So if it is taken under a proprietorship or a normal partnership firm, then your personal assets can be utilized to repay that liabilities, your home, your car, this, that, whatever assets, gold and anything you have in your person. For if you are running a business in, let's say, limited liability, LLP or private limited, in that case whatever money is there, that will be paid out of business only. The bank people and all, they cannot come and recover from your personal assets. Okay. Tax liability as per individual tax slab. So tax liability under Income Tax Act. So on profit, what tax, at what rate tax you have to pay is, so for a sole proprietorship, the whatever the business profit is there, that will be clubbed together with any other source of income, and then it will be taxed under normal slab rates, whether it's old regime or new regime. For a partnership firm and for a private limited, there is, you can see that it is 30% flat rate. So flat rate is there in the partnership as well as LLP. So it is the highest tax partnership firm and limited liability partnership. Disadvantage is that the 30% tax slab will come, whereas in this you have the tax will go as per tax slab. As of now, the new regime tax slab, as you are aware, 4, 8, then 12, then 16, then your 20, and then 24, 5%, then your 10%, then 15%, then 20%, then your 25, and then 30%. So this is the slab rate. Based on this, the tax will go. Now when you come about domestic company, you see that if your turnover is less than 400 crore, you can opt for a 25% tax rate, or if turnover is more than 400 crore, then the tax rate will be 30%. New manufacturing companies under section 115 BAB of Old Income Tax Act, 15% is the tax rate. For other domestic companies, it will be 20% under 115 BAA of the old act, without exemption and deduction 22%. So if you see comparatively, if the private limited company offers a better tax rate, okay, so if you want to save amount in tax, then this is the advantages. Okay. Next, admission and cessation as a partner and member, not possible. Admission, cessation as a partner and member. So now let's say if a business is running in like these type of structures, then whether we can add any partner or member, or if they want to leave, can they go cease also or not? So admission, cessation as a partner and member. So in the sole proprietorship, sole owner is there, so not possible. Okay. For a partnership firm, if any partner is to be added or partner wants to leave, that he has to fulfill the conditions of partnership. As per the partnership agreement, he can become a partner, or for existing partner can leave, but he has to satisfy the partnership agreement conditions, whatever the partnership agreement says. Okay. As per LLP Act, a person can be admitted as a cease as a partner as per the LLP agreement. In LLP also, the partner can and a new partner can also join. So as per LLP agreement, they will write the conditions that if a partner is onboarded, then how it will be onboarded, what will be the consent has to be taken from all, and for what purpose it can be added. All those things will be written in the LLP agreement. As well as if any existing partner wants to leave, then he has to give a 30 days notice and he can exit from the LLP. Private limited company, a person can become a member by buying shares and can cease to be a member by selling the shares. So if you see that very simple is entry and exit is there in the private limited. So if comparatively this is the best for this criteria, very easy entry and very easy exit. You have to just sell the shares to exit the company and just buy the shares, and you are not forced by any, like it is not, you will be not binding that you cannot sell and all. You can sell anytime your shares and you can buy also anytime shares also, like that. Okay, so if you compare all these four, then private limited is the best. Transferability of interest. Now let's understand, if somebody wants to transfer my, like I was a part of a business, let's say private limited, or I was a part of a private partnership firm or LLP. Now I'm not willing to continue because my some other reasons can be there, my pre-occupancy somewhere, or I'm not interested, or my health is not supporting, for any good reason. I want to transfer my stake to some third person who is willing to buy. Let's see whether it is allowed or not allowed. So transferability of interest. So sole proprietorship transferability is not possible. A partner can transfer his interest subject to partnership agreement. So if partnership agreements allow for transfer, then a person can transfer his interest to another person. A partner can transfer his interest subject to, and for LLP also, if LLP agreement provides for the transfer, then a designated partner or partner can transfer his interest. A member in a private limited company, there is no restriction at all. No document also can restrict this. A member can freely transfer his interest. I want to sell my shares, I can sell it to somebody, and the other person can become there is no consent required, no agreement, or no I have to check any conditions from anywhere. Okay, now let's understand the next condition criteria. Transfer of shares and partnership right in case of death. Let's say if somebody is doing a business and he dies, then what will happen next? Whether the legal heir becomes a member of the company, or legal heir becomes the partner of the designated partner of the partnership, LLP, or normal partnership firm, or sole proprietor dies, whether his legal heir becomes a sole proprietor again of that business or not. Let's see this. Okay, so transfer of shares and partnership rights in case of death. So no transfer. A legal heir inherits the business. That means if a sole proprietorship is there, he was doing the business in his name. Now if he dies, then what will happen? That the previous registrations has to be closed. A new registrations has to be taken by the legal heir, and he can continue the business. He can he can continue with that business, but he has to close the existing registration. Whatever is there, he has to close that and take in his own name, because previous registrations were the person in the name of deceased person. Okay, so he cannot continue on that. Now for a normal partnership firm, not transferable legal heirs. So in a normal partnership firm, what we will see is that when a partner dies, then in that case the legal heir automatically do not becomes member of the partnership firm. Okay, and what maximum right the legal heir can have is that he can take the refund of capital contribution done by his person and the share of accumulated profit, but do not become partner. Okay, so you see the limitation is there. If I was a partner of any partnership firm, and I have worked over the years and all, because of certain reason I get passed away, and then my legal heirs do not have interest in that business. What goodwill I have created, so much time I have involved, what maximum my legal heirs will get is that part of capital contribution what I have done and the accumulated profits. So again you see that this is very, like, it comes with a limitation. In partnership this is disadvantage. If you go for a normal partnership, you do not become automatically member partner in the business. Legal heirs do not become partners. So if you are planning for upcoming generations, that how they should do the business and all, then it is better not to do the business in a partnership firm, and if the partners are from the outside the family, then, because at these times the other partners can take advantages of these situations. For LLP also, it's not transferable. Legal heir have right to get refund of capital contribution and accumulated profits, but don't become. So in LLP also, again you see that automatically the partner deceased partner's legal heir will not become a partner. Private limited company, on death, share transfers to legal heir, ownership is easily transferred. Here this is the best structure if you compare for this point. Private limited, if I own a share of any private limited company, for any reason if a person is passed away, then the legal heir will become a member, automatically member of the company. So he will continue to enjoy the dividends, profits of that company, and even the voting rights of that company. So he is not out of business, so he remains a part of business for futures also. Director DIN number and designated partnership identification. Let's understand this point now. So what happens in India, for a LLP or in a private limited companies, government wants to know that who are the main people behind that business. Okay, so for that the government has given a unique identification number. So that is for in LLP it is called designated partnership identification number, partner identification number, and in companies it is called director identification number. So what happens, government wants to know that if any business is running, who are the people who are running it, who are the people who are sitting backside and doing day-to-day activities and taking care all those. So that's why the government has given, and many a times existing one person can be a partner director in multiple companies or partners in multiple companies. So only one person will get lifetime one UDIN only or one DIN only. So designated identification number will remain one only. It will be for one person one, even if you are partner of multiple partnership from LLPs or private limited. Okay. So with that DIN, all the other companies in which you are interested as a director or designated partner, you will be linked. So in the sole proprietorship is not required. Partner need no identification number. In partnership firm also normal 1932 no identification number is there for partners. But this is the new structures which India is having. In this, MCA is giving the designated partners identification number, and in company cases it is director identification number given. Okay, so if you are you're starting a business, then if you don't have any DIN, then at the time of incorporation all persons will get DIN or DPIN from the MCA. Or otherwise, if you are a company is already running and now you are becoming part of that business, then you first have to apply for DIN or DPIN and then you become a part of that business. Without that, you cannot become a designated partner or director of any company. Okay. Okay, so let's continue to next point, digital signature. So what is exactly the digital signature? Nowadays, all forms are required to be signed digitally. So you don't sign the documents manually, printing it and then signing and then sending. So online documents are there, e-forms are there. Those forms are to be signed by the digital signature only. So how to apply for a digital signature and what exactly it is? So what you do is that there are certain authorities which issue the digital signatures, and you forward the documents to those authorities, and they will prepare your KYC in the government database, and they will send a link to you. Using that, you have to create a video that I am applying for the digital signature, and then that video will be verified backend by those companies. And once that is verified, they will give you one small software that you have to download on a token, pen drive kind of a token. And once you install that software in your pen drive, then using that pen drive kind of small token device, you can sign the electronic forms. I hope you are able to understand my point, right? Okay, so this is what a digital signature is all about. So what happens? Okay, so let's read how the digital signature is used in different kind of business structures. So sole proprietorship firm, there is no as such online registration required and anything like that. So for certain places it can be still used, so it's an optional. Okay, so optional for better experience. For partnership firm also, there is no online form which has to be registered like MC and all, anything like that. So again, it's an optional here also for better experience. Now limited liability partnership, at the time of incorporation all partners need DSC. Later, at least one designated partner must have DSC. So at the time of incorporation, all the partners, designated partners who are going to be the firm's partner, they have to have a mandatorily digital signatures so that they can sign the application. And afterwards, only one digital signature, designated partner, even if you have one digital designated partner is having digital signature, then it can be taken care. Similarly, for the at the time of private limited incorporation, all promoters and directors should have, and later on at least one director must have DSC, digital signature certificate. Okay, let's talk about dissolution. So in which cases the dissolution will happen, the business will close down. So by in a sole proprietorship, by simply cancelling the tax registration, the dissolution happens, and if the proprietor do not want to continue the business, he can close down the business like this. And for partnership firm, it can happen by an agreement. it can happen via agreement, it can happen due to like with a mutual consent, or the firm partnership firm becomes insolvent because of insolvency, certain other contingencies, and by court order the dissolution of partnership firm can also happen. For limited liability partnership firm, the dissolution can happen either voluntary or by NCLAT order, National Company Law Appellate Tribunal, or for private limited also voluntary or order by NCLT, National Company Law Tribunal. Okay, now let's talk about the requirement of managerial person for daily administration. So for a sole proprietorship, no managerial person required, proprietor manages the business. No manager required in partnership firm, partners run the business. Okay, and for a LLP, the designated partner manages the daily business and ensures statutory compliances. So these are the people here. The designated partners will manage, here partners will manage, here sole proprietors generally manage the business. Directors must in the private limited cases, the directors are the persons who are going to manage the business operations and ensure the statutory compliances for or on behalf of members. Okay, remuneration of managerial persons for daily administration. Now proprietor withdraws as needed, directly earning profits without separate salary. So in a proprietary case, the proprietor themselves do not withdraw as such salary. Whatever the profits the proprietorship firm is having, generally that is withdrawn by the proprietor. Okay, partners in the partnership firm, partners can receive the remuneration as per the partnership deed mutually agreed upon. So for a partnership, that partners can withdraw the remuneration based on the mutually agreed ratio. Okay, at the time that can be written in the partnership deed itself, that the following that this much amount of, or there can be formula framed based on which the remuneration can be withdrawn by the partners. Similarly for the LLP also will depend upon the LLP agreement, and then company can pay remuneration to its directors subject to law. So in the Companies Act, there is a clear-cut provisions given in the Companies Act that what can be the maximum remuneration can be paid to the managerial person. So there are specified provisions for related to managerial remuneration in private limited, so that those are to be complied with. Okay, statutory meetings. Now understand, so statutory meetings, no provisions holding meetings, as we know that sole proprietorship, no specific law, so there is no provision of holding meetings. For partnership firm also, no provisions for holding meetings. For a LLP also, there are no provisions for holding the statutory meetings. But in the private limited case, they are mandatorily, they are supposed to hold board meeting 4 times in a year, 4 times, and a general meeting, minimum annual general meeting it has to hold. So for the private limited, holding board meeting and general meeting is mandatory. Okay, maintenance of minutes. Now whenever a meeting is happening, the records are kept of that, and it is called maintenance of minutes. So minutes are maintained. So whether there is a requirement for proprietorship, no concept of minutes here. Even partnership firm do not have any concept. A LLP agreement may decide to record the proceedings of meetings of the partners and designated partners. Okay, board and shareholders meetings proceedings must be recorded. Here it is mandatory. Here it is mandatory to record boards and shareholders meeting and any other meeting which is happening. The minutes of those meetings are prepared, and then they are later approved and kept in records also, so that later on it can be again referred that what particular decision was taken in that meeting and who has attended and who has not attended, like those kind of things. For that records are kept. Okay, now let's discuss about the maintenance of statutory records. Okay, as per what are the records they are supposed to keep. So sole proprietorship aren't made to maintain specific statutory records, but as per income tax and GST Act, proprietor should keep books of account, tax invoices, receipt and vouchers, bank statements, GST returns and supporting documents, sale purchase expense register, stock records, tax challan payment receipt, TDS deducted at source records. These records ensure compliance with tax and GST regulations as well as proper financial management. So proprietorship, for a proprietor, they have to follow the GST and tax laws, income tax law, and based on that these are supposed to keep these records. Okay, partnership firm, partnership deed A binding agreement outlining partnership firms are supposed to maintain properly partnership deed, a binding agreement outlining the partners' rights, duties, profit sharing ratio, capital contribution ratio, dispute resolution, and terms of admission and exit as per Partnership Act 1932. So all the partnership are supposed to keep the partnership deed very safely and maintain it. Okay, books of account. Partnership firms are also required to maintain books of account, detailed records of financial transactions including income, expenses, assets, liabilities as required by the Partnership Act 1932. Minutes of meeting. While not mandatory, documenting decisions from partners meeting is good practice and for transparency and record keeping. So it's not mandatory, but it is a good practice. Now let's talk about what are the statutory records to be kept by the limited liability partnership firm. LLP agreement. LLP agreement is a main document, chartered of the LLP, so it is required to be kept. A formal document defining rights, duties, profit sharing, capital contribution, and terms for admission and exit of partners as per the LLP Act. So they are supposed to keep LLP agreement. Books of account, detailed records of financial transactions including income, expenses, asset, liabilities as per income tax and GST. Includes sale purchase register, GST filings, and financial statement. So what are the statutory registers? These are the statutory registers that every LLP is required to keep mandatorily. Register of partners, detail of current and past partners including contributions and profit sharing under LLP Act 2008. So this is mandatory for all the LLPs to keep. Okay, register of partners. Register of charges. Record any charges or mortgage on LLP assets as required by LLP Act. So if any charges are carried on the assets of the LLP, then this has to be registered in the register of charges. Okay. Minutes of meeting. While not mandatory, documenting decision from the partners meeting is advisable under the LLP Act for transparency and dispute resolution. Okay, now let's talk about maintenance statutory registers for private limited company. Books of account. Detailed financial records maintained at registered office. Statutory registers under Companies Act. What are the statutory registers which are mandatorily to be kept by the private limited companies? Are register of members, in which who are the members of the company, that is written. Then register of directors and key managerial persons, who are the directors and key managerial persons of the company, that are to be written there. Register of charges, any mortgage or anything interest has been created on the assets of the private limited company, then it is to be entered here. Register of loans given, guarantees provided, and securities mortgaged. Okay, so that has to go in MBP2. These are the registers name: MGT1, DIR 12, CHG7, MBP1 as specified in Companies Act 2013. Now minutes books, boards meeting minutes we have to keep, committee meetings minutes we have to keep, and general meeting minutes we have to keep. Other records, so share certificate, issuance and transfer details. So this is very important document which is to be kept by the every private limited company. Share certificate, issuance and transfer details, and annual returns and financial statements filed with registrar of companies. So whatever each year the financial returns are filed and prepared, and annual returns are prepared and filed, that those are to be kept by the private limited companies. Okay, let's come to next point now. Books of accounts. So sole proprietorship, the books of accounts are kept as per the Income Tax Act. Again in partnership also as per Income Tax Act. LLP, under LLP the books of accounts are kept as per LLP Act 2008 and Income Tax. And as per private limited company, private limited is required to maintain books of account as per Companies Act 2013 and then income tax compliances. Voting rights. Now every business structure is having business and voting rights. Only the sole proprietorship, as the sole owner is there, so not applicable voting rights in this case. So any decisions to be taken in the business structure, that has to be done by majority, or sometimes with the special resolution or ordinary resolution. Generally with the majority most of the decisions are taken. So it depends. So in the partnership, how the voting rights will be there, so it will be written in the partnership deed. For limited liability partnership firm, the voting rights shall be decided as per the LLP agreement, and for private limited the voting rights has decided as per the number of shares, as per the number of shares held by the members, Okay. Contract with partners and directors. Proprietors are free to enter in contract. So let's understand this point now. Contract with partners and directors. So can a partnership firm or a private limited company or an LLP can enter into a, let's say LLP can enter into a and contract with the designated partner? Can private limited can enter into a contract or agreement with the director himself, or in which the director is interested? Partnership firm can enter into a contract with partner. Is it possible or not? Let's discuss those. So proprietors are free to enter into any contract. In a sole proprietorship, the business and proprietor are legally the same. So the proprietor can't contract with themselves but can contract with third parties on behalf of the business. I think you are able to understand. So partners are in the partnership firm, partners are free to enter any contract with the partnership firm and the third party. Here the partner can enter into contract with partnership firm as well as third party. Okay, so you have to understand this, that contract can happen. What kind of contracts can happen? So partner can lend a, let's say, building or land, or can give assets to the partnership firm, and in consideration they can take a rent or lease payment, or they can take a rent for the machine also. So those kind of things, that kind of contracts can be there, where a partner can give something to, in the consideration the firm can pay some amount to partner. Okay, similarly for a partnership firm, LLP, partners are free to enter any contract with the partnership firm and third party. Partners can have contractual relationship with the LLP, like services agreement or loan arrangement. Sometimes the partners can give a loan amount also, and the partnership can partnership deed can provide for paying of interest also on that. So these kind of contracts can be there. Okay, now in private limited, director must disclose their interest in a specified contract and approval from the board or that. So in private limited, what Companies Act says that if director is interested in any contract, okay, is there, if any contract is happening by company, private limited company is entering into any contract, okay, and in which the director is also interested. If director is interested in this contract, then director has to disclose this interest to private limited company, to all directors as well as company, that means shareholders. And in that cases, depending on the circumstances, the approval from the board or the sometimes shareholders is required. Okay, why this is so that the director should not take undue advantages, because they are in the executive position. They should not get benefited out of contracts, like undue benefit they should not get. If they are getting the general market benefits, then no problem, but the undue benefits they should not get. So for that only the disclosure has to be made by the director if any contract the company is entering into with any third party or directly with the directors. Okay. Annual filings. No return is required to be filed with the registrar of firms. No return required to be filed with registrar of firms in partnership, but in LLP, Form 8 and Form 11, annual statement of accounts and solvency and annual return must be filed with registrar of companies every year. So even if the business is happening, not happening, whatever the case is there, but you have to mandatorily file Form 8 and Form 11 with the MCA, Ministry of Corporate Affairs. Annual financial for the private limited company, the AOC 4 and MGT 7A, these are the two forms which are mandatory to file. AOC 4 filing of annual financial statement, and MGT 7A annual returns, which are required to be filed by every private limited company, no matter what is the volume of business and all. Mandatorily it is to be filed each year along with the payment of some government fee. Okay, so that government is collecting the database of these LLPs and MCA, what each year, what their business they are doing and all that. Okay. Audit of accounts. Now, proprietorship firms require tax audit of their accounts under Income Tax Act provision if crosses turnover threshold applicable. So only audit will applicable to proprietors if the threshold of the tax audit is crossed, then only it is audited. For proprietorship partnership firm also, only the income tax audit will happen if the threshold is crossed. Now when it comes to LLP with a turnover of above 40 lakh, or 25 lakh rupee capital contribution or above 25 lakh rupee capital contribution must get account audited annually as per LLP Act 2008. So in this case, if turnover is more than 40 lakh rupee or the capital contribution is more than 25 lakh rupee, then it is to be mandatorily audited by the chartered accountant, and audit report has to be issued by a CA. Okay, companies must get their accounts audited annually as per the Companies Act. Now, as there is a threshold but in private limited there is no threshold. Company must get their accounts audited, whether the company is have business or not business. Every company has to get the accounts audited by a chartered accountant each year. Okay, now okay, let's come to next point now. 36 point, share certificate. So share certificate is a document, share certificate, which proves the ownership of a person, okay, in a company or stake in the company. Okay, so sole proprietorship, there is nothing called a share certificate. The partnership form, the ownership in a partnership is confirmed by the partnership deed. Similarly for LLP, the ownership in LLP is confirmed by the LLP agreement. So in LLP it will be written that particular director, particular share partner is holding this much, profit sharing ratio is this much, capital contribution ratio is this much, and all that. Okay, private limited company, share certificate. Private limited company issues share certificate, confirms the ownership of the shares held by the member in a company. Okay, accounting standards. Now accounting standards are issued by the ICAI and MCA, so to make sure that the accounts are prepared in a standard format by all the kind of business structures. So for sole proprietorship, as of now, no AS are applicable as per ICAI guideline. No AS applies, but as AS apply partnership only if the audit is mandatory under income tax and the turnover exceeds the limit. Otherwise it is recommended, not mandatory. Okay, so here it is not applicable. Here it says if threshold is crossed, then it is we have to prepare, otherwise it's not mandatory. AS applied to LLP only if the audit is mandatory under LLP Act, otherwise it is not mandatory. AS are mandatory for all companies under the Companies Act 2013. So all companies are required to follow accounting standard, and certain companies which crosses the net worth of exceeding 2,50,000 crore, those companies are required to follow the Indian accounting standards. Okay, next, mergers, amalgamation, compromise arrangements. Okay, so let's understand, when let's say two firms are there, they want to merge and become one. Let's say C they want to form, or otherwise A want to buy B, so B it will become, so it will merge. Okay, so these kind of arrangements are possible under these structures or not, let's discuss. As well as sometimes the business of a firm, of a company or entity is not good, then in such case they can make an arrangement with the creditors as well as shareholders. So they can enter into an arrangement. The creditors, they can tell that okay, they make an arrangement that instead of paying you full liability, the company is not having that situation, so company will pay out of 100 rupees 80 rupees, like those kind of arrangements can be there between the creditors and company, so that company runs also. At the same time, some liability is also paid and some is waived off. Similarly, if shareholders are having any dividend claims pending and all that, the company can, or the entity can enter into a compromise arrangement with the shareholders also, okay, for waiving the dividends and all those things. So proprietors cannot merge with the other firm and enter into compromise or arrangement with the creditors and proprietors. So here in proprietorship it is not possible. Partnership cannot merge with the other partnership firm or enter into compromise or arrangement with other creditors. So in this also it is not possible. LLP can enter into compromise, arrangement, and mergers and amalgamation. So LLPs, again, it is an advantage in LLP. These things are possible in private level. In a normal partnership firm, it is not possible. So and for companies, again, the companies can enter into compromise arrangement, mergers, amalgamations. So you can see that it is advantageous if you are planning in future, if you want you want to go for some mergers, amalgamations, so to get an inorganic growth in your business. That kind of thing is there. If you are planning, then you should go for either LLP or the best is private limited company. Okay, now let's say operation and mismanagement. Many a times we have seen in the company that let's say either partners are there or shareholders are there. There are, let's say, 4 partners and 3 partners make a group, and then they oppress this partner, because there are 3 partners, they can take any decision, and the another one partner, because he is not having any majority and all, his voting rights are lesser, he cannot take any decisions. So that time there can be some operations. We have seen like there can be some operations, the rights are not given, or like the decisions are taken in favor of other 3 partners and all, like those kind of things can be there. So that is called operation and mismanagement. So there can be sometimes mismanagement by the partners, misutilizing the funds and all those kind of things can also be there. Similarly, for the in the private limited companies also, some group of shareholders, they may form a group, and the rest shareholders are very less shareholders. So in that case also the operation can happen or mismanagement can happen in a company. So let's see, is there any provision to take care of those things and to overcome all those challenges. So in proprietorship, not applicable due to single ownership. So these kind of things cannot be possible in ownership, as only single owner is there. Now no remedy exists. Again, you see there is a disadvantage or limitation in the partnership firm. The no remedy exists in case of operation of any partner or mismanagement of partnership. If any operation is there of any partner, then also there is no remedy available, and mismanagement is happening, again no remedy is available. There is no provision for redressal of operation mismanagement. LLP also do not have any provisions like this, but private limited is having the provisions like this, in which they have given remedies by which you can make sure that any operation is happening that can be stopped and prevented also. So provisions providing for remedy against operation mismanagement exist in the private limited company. So it's really good. So where the involvement is there of outsiders other than your family members, or even sometimes in family members, this structure is best because it gives the remedy also. Now credit worthiness of organization. Now whether the organization commands credit worthiness or not, this depends on a few factors. Let's discuss those. So for a sole proprietorship, the firm's credit worthiness depend on the goodwill and credit worthiness of its proprietor. So it's a proprietor and business are the same, so the dependency of the credit worthiness and of organization depends on the sole proprietorship. In a partnership firm, the firm's credit worthiness depends on the partners, goodwill and credit worthiness of partners. Now for LLP, the LLP will enjoy comparatively higher credit worthiness from the partnership due to stringent regulatory framework, but lesser than the company. As I told you previously, that highest structure in India is private limited. So this is LLP is better than private partnership firm, but little less than the private limited company. So in this case, credit worthiness is more than the normal partnership because there is a stringent compliances applicable because of LLP Act 2008. Now due to the stringent compliances and disclosures under various laws, company enjoys the high degree of credit worthiness. So if you have a, let's say your proprietorship is there or normal partnership firm is there, banks will hesitate in giving loans, and even some other stakeholders will be hesitated to invest in as an investor to invest in your companies. But if you have an LLP structure or a private limited company, people will get ready faster than as comparison to others, because here it is more deeply regulated by the laws, LLP Act 2008 or Companies Act 2013, and because there are a lot of disclosures to be made, so transparency is there, stringent compliances are there, so this enjoys higher credit worthiness. Okay, conversion. Now let's understand whether the proprietorship can be converted into partnership firm, or partnership firm can be converted into LLP, or LLP can be converted into private limited, or similarly private limited can be converted into LLP. Like this, let's understand this. A sole proprietorship cannot be directly converted into private limited company. It requires incorporating a new entity and transferring the business. So directly there is no possibility that it can convert here, or it can be converted to LLP, or it can be converted into private limited. Only thing is that you have to start a new entity and transfer your existing assets business to the private limited company. So direct conversion is not possible. A registered firm can be converted into LLP. Registered firm, when I say that means it is registered with the registrar of firms. Okay, under an LLP Act with the procedure outlined in this, it can also be converted into a private limited company by following procedure under company, which involves incorporating a new company. So partnership firm can be directly converted into LLP, whereas the private limited, it cannot be directly converted to private limited. Then for the private limited, again it has to create a new entity, and then business has to be transferred to new private limited company. Okay, but directly conversion is possible into LLP. For LLP, can LLP converted into private limited? Yes, it can be converted. Provisions are there in which the LLP can be converted directly to the private limited. The LLP Act allows a private company or unlisted public company to convert into an LLP. The following procedures are, even the private limited can be converted into later on LLP. This is also possible. So both are possible here, vice versa. So LLP can be converted into private limited, and private limited can be converted into LLP directly, instead of going to the route of incorporating new company and transferring of assets and all that is not required. Okay, so you see that even if your initial requirements are not of private limited company, you can go for a LLP, and later on there is the option of a private limited company. Okay, or if you have incorporated a private limited company but later on your requirement changes, you can again shift to LLP. Okay, that provisions are available. Okay, so there is a registration called, now next point, there is a registration called Startup India, that is done with the DPIIT department in Indian government department. So if your business is registered as a sole proprietor, you are ineligible. You cannot be registered under DPIIT India, Startup India registration. For a partnership firm also, normal partnership firm are also not allowed. Only LLPs are eligible for registering under DPIIT, and private limited are only eligible for this. So under DPIIT registration, the government has given some benefits like 3 years, no payment of taxes. Those kind of some schemes are rolled out, and in future also the government is going to roll out some benefits if you are registered under Startup India, to promote the startup culture in India, or to support the existing startups. The government has started this registration. So again, you see that there is a limitation in the sole proprietorship and partnership, whereas the LLP and private limited, you can have these registrations. So if you are looking for those kind of relief or subsidies from the government, then you should start your company from LLP or private limited company. Don't go for any partnership or sole proprietorship or partnership firm. Okay, now compliances. So what are the compliances applicable for sole proprietorship? GST can be applicable, income tax is mandatory there. TDS applies only when the turnover or gross receipt exceeds specified limit in the preceding financial year. Okay, for a partnership firm, GST is applicable, income tax is applicable. TDS, again the threshold it's applicable not from threshold, because it's applicable from the beginning. That is something which has to be noted. Only sole proprietorship is in that case only TDS becomes applicable when you have crossed the threshold in the preceding financial year of tax audit, otherwise not applicable. But for partnership firm, for limited liability partnership firm, private limited companies, TDS becomes applicable from the beginning of the firm or entity. So GST, income tax, TDS, and then you have to file the annual returns and financial statements with MCA and get the audit done. Here again MCA and audit to be done in a private limited company also, and here minimum 2 board meetings are required for a small company, and AGM is mandatory. Okay, now let's discuss about the cost of formation, that means professional fee. So when I say professional fee, that means the government fee will be in addition to this. Okay, this is the fee which is charged by the chartered accountants or consultants for registering your entity. Okay, so for a sole proprietorship, the charges ranges from 2,500 to 5,000 rupees. Now why it range is coming? Because you may require GST, you may require MSME, you may require shop and establishment license, you may require PT. So based on these, whatever registrations you want as of now and which are required to be taken by you, the general range between is 2,500 to 5,000 rupees. It's a general rate. Some people can charge more based on their services and all, so depends. And then general, I'm just giving a basic understanding. So if you want to form a partnership firm, the charges ranges from 5,500 to 10,500. What it will involve is that your partnership deed it will involve, then drafting of partnership deed, taking of stamp papers, getting it notarized, then applying for PAN, then applying for TEN, then going for GST registration, then shop and establishment license, then your maybe PT registration. So all these kind of registrations will come based on, depending on the what is your nature, your business requires these kind of registrations, and the price, professional fee charges will be 5,500 to 10,500, and government fee wherever or reimbursement cost will be extra. Now for LLP, the charges is 8,500 to 11,000 professional fee plus government fee or other reimbursement expenses. Okay, so when we say about in this limited liability partnership, they starts from name reservation. First we have to go for a name reservation, then we go for submitting the initial Philip form, in which by filing that you will get certificate of incorporation, PAN and registration, all those things you will receive, and then afterwards you have to file your LLP deed with the MCA, and that will be getting approved, and then you will require that your digital signatures, your GST registration, again these things, shop and establishment, S&E registration, PT, all those things. So depending on that, what registrations you are planning to take as of now, or what is you should take, the fees will range somewhat in between like this, and it keeps changing over the time, and the changes are coming, the prices can be more or less. Okay, so it's just an idea for that. For a private limited company, again the 12,000 to 15,000 will be the charges, and in addition to that government fee will come. Okay, so as of now, if you see, the government fee approximately for registering a company in Bangalore is around 12k is a government fee itself. Then you will incur a cost for your digital signatures and all that is additional. So this is the what general professional fee charged by the as of now professionals and consultants. Okay, so now as we have gone through all these criterias comparing sole proprietorship, partnership, LLP and private limited, so let's understand what is best for the sole proprietors. Is best for small businesses, freelancers, consultants who are giving try and seeing that whether things work out or not, that those are not looking for intensive capital or investors immediately, or those kind of people can go for a sole proprietorship. For a partnership firm, small businesses with the 2 or more owners, traditional kind of businesses, those businesses can go for a normal partnership firm. And my suggestion is that we should register partnership firm, as it doesn't allow you to file the case and all those things if it is unregistered one. Okay, and for a LLP is best for professional services, startups, business wanting limited liability. So you know that there's a very good concept of limited liability. So anybody looking for a limited liability, it should not reach to your personal assets, so you can go out for this also. And now the private limited is the highest structure in India. So it will, if you are looking for a scalable business, startups, companies requiring fundings, foreign participation, all those things is your plan, then you should go for a private limited company. Okay, so with this we have completed our part 1. We have various structures we have compared with the set criterias. Now in the upcoming video we are going to discuss that in what are the further advantages, disadvantages, and how to conclude which type of structure you should opt for, as you now aware of what is sole proprietorship, partnership firm, limited liability, partnership firm, private limited. Now we will assist you in concluding the what structure is best suitable for you. Okay, so thank you so much.